What is the difference between these two engulfing candles? They're the same. They're the exact same price action. Yet, one worked and the other one got stopped out. Seriously. They're the exact same. Now you could argue, okay, this comes from after an up move, this comes after a down move. Okay. But they're still the exact same price action. Now, there's something that goes above and beyond the chart here. So in this video, I'm going to expose exactly the difference between this price action and this price action. The one that is noise and the one that is what? Following. And I'm going to tell you, what I'm going to show you and what I'm going to teach you goes completely the other way of what 99% of traders out there teach you. And you'll see why. See, you have to understand what the market really is. It's a giant ecosystem of people doing things for reasons that have nothing to do with predicting the next move. Often. There are corporations converting euro back to dollars for non-speculative reasons. It might be banks hedging currency exposures, algorithm arbitraging tiny spreads. There are portfolio managers for a Japanese fund buying US treasuries for quarterly balancing. They might have to sell yen and buy dollars for it. And then there's countless smaller funds and algorithms. There is a lot. All chasing their own tails, creating meaningless market activity. Now the point is, most of these traders aren't speculating, they're just doing their business. Yet, the sum of their action can be big enough to paint something on the chart, like this beautiful bullish pin bar. They cluster together and they create a price action. It looks like a signal, but it's noise. It doesn't have speculative intent behind it. It doesn't really signal market direction because it's just random. It formed for no speculative reason. It has no conviction, no directional intent behind it. And in fact, the moment you trade it, the flow disperses and the pattern collapses. Now you know this. You've been here. You get it. But among all that noise, there's actually another flow because price action does work. So there is real signal in price action. This price action here, this bullish engulfing here, is not noise. It's signal. It actually led to a market continuation to the upside. So this is hedge fund, large speculative traders, institutional trading desks. They don't trade because they have to for portfolio rebalancing reasons, although sometimes they do. But most of the time they trade because they have a powerful fundamental conviction. They trade when, for instance, a CPI prints, hard or soft, whatever. They trade when a labor market prints. The point is that they're not trading the chart, they're trading the fundamental story. I mean, they're not trading only the chart, because they're also trading the chart, don't get me wrong. But they're not trading only the chart, they're also trading the fundamental story. And when they act, they move with such force that they end up carving a price action on the chart. And this is the price action that we want to follow. This is the signal that tells us, okay, the market is going to move in a certain direction. So the question becomes, how do we recognize the difference when price action doesn't mean anything and when it actually means something that we want to follow? So how do we know when a pattern we see on the chart is just random flows or is a signal that we want to follow? Now this difference makes really the whole difference in your trading, because then you can understand what you actually can follow and what you should ignore. Now, let me get very specific. Let's take one of the most powerful price action of all, the engulfing candle. Now, this is a very simple price action. Everybody knows it. I see traders calling out engulfing pretty much everything. Most of it is garbage. For me, the definition is non-negotiable. And it's this way for a specific reason. For a candle to be a true bullish engulfing, it must do two things. First, its body must engulf the body of the previous candle. So the candle needs to close above the high of the previous candle. Now, obviously, it's called an engulfing for a reason, okay? But two, and this is the part that everyone misses, it must first break the low of the previous candle, okay? Simple. Why is this so critical? Because if you think about it, think about what happens inside this candle. Now, the candle opens right here. This is the previous day price action and it is the current day price action. Bears managed to continue the previous day sell all the way below the previous candle low. They break the low and yet they fail the breakout. Buyers managed to step back in, push the price all the way up above the previous candle high and managed, most importantly, this is the most important part, they managed to close back above it. Okay, they don't fail the breakout here, they don't close here, they close above the previous candle high. Now, Think about what's going on here. Sellers are trapped. They shorted all the previous daily candle. They shorted at the lows, and now they find themselves in the wrong side of the market. This is what I call an engulfing candle. Now, here's where it gets really interesting. Here's the secret that ties everything together. Even a technically perfect engulfing candle, like the one I've shown you, where it actually closes above the previous day, breaks the low of the previous day, perfect. It's a perfect engulfing candle. But this can still be noise. So the question we must always ask to really make the difference is, what formed this? Was there a specific high-impact fundamental catalyst that gave the bulls or bears a reason to fight this hard? Was it maybe a CPI print? An inflation print? Was it maybe the labor market? Was it maybe a central bank comment? Was it maybe a geopolitical catalyst? Whatever it was, when you align a powerful fundamental bias with a technically perfect price action, this is when you get a solid trade. Now, you've been told, and I know for a fact, because this is what I've been told almost a decade ago, that the price action during big news events is noise. Let me tell you, that couldn't be further from the truth. The price action during a major news event is a signal, and it's one of the best kinds. It's the clearest and most honest signal that the market ever gives us, because it's when the big funds, the large speculative traders, reveal their intentions. Let me show you what I mean. Let's say the market is expecting the yearly inflation number, CPI, to come at 2.9%. The narrative is that inflation is cooling, it's stable, the Fed will cut rates. Perfect. The number prints, and it's not 2.9, it's 3.1%. Instantly, the entire fundamental story changes. The Fed will cut narrative is thrown into doubt. Now, something is changing here. You can already understand that this is an important fundamental shift. But you decide to ignore the short-term volatility, so you come back the day after, and on the daily chart you see this. See what's going on here? This is a footprint, okay? This is not a random engulfing candle. The story, the hot CPI print, gave the big players the reason, the motive to act, and the price action is the signal on the chart. It's the visualization of that sentiment on the chart. Now, this bullish engulfing takes on a whole different meaning. It's not just a pattern on a chart, it's a footprint of the real sentiment and decisions from large speculative traders who decided to take action during this CPI print. They're telling us, okay, this is what's going on. The CPI was in fact hot, and so the pair should move higher. And in fact, they position for it. This is how you give meaning to your technical trading. When you see a technical setup on a chart, open up your favorite economic calendar, Forex Factory, whatever, and see if any important data was released that could have triggered this. I want you to be picky here though. Don't fall into the confirmation bias trap. Like you see a setup on a chart and you start looking for confirmation of the bias everywhere. Okay? You look at the calendar and you see building permits in the US have surprised by a tiny margin and you think you have a fundamental catalyst. Don't do that. Look for a real catalyst. Inflation prints, labor market indicators, the real stuff that moves the needle for the central bank. That said, the economic calendar is not where fundamental analysis is made, at least it's not where fundamental analysis is only made. Because very often, the market moving events happen with a single comment from a central bank, a world leader, whatever. So they happen outside of the calendar. So if there's nothing, for instance, on Forex Factory, your next step is to scroll through the headlines at, for instance, Financial Juice to see if anything interesting is happening behind the chart. If you find it, great. If you don't, great. Our task is to put the two together. Always. To have the patience to wait for a nice, perfect price action on the chart, in this case a bullish engulfing, and the discipline to also understand what's going on behind the chart. This is the difference between guessing and trading. Between being a gambler and a professional trader. It's not easy, I understand that. It's not easy to look for both of these things. I understand. It also requires a new way of thinking. But I can tell you, this is the path to consistency. This is exactly how we trade consistently. I'm not here talking random. We put this stuff in action and it delivers long-term results. So if this framework resonates with you, like the video and subscribe. We're here to build real traders.